Hey everyone, and welcome back. We're diving deep today, and well, it might sound a little dry at first, but stick with us.
Oh,
We're
yeah.
talking global economics.
All right.
But trust me, it's anything but boring. We're going to be using economist Yanis Varoufakis's work as our guide,
Okay.
specifically his book Global Minotaur, to kind of understand how the U.S. has shaped the world economy. Get ready to see the world through an entirely new lens.
Yeah, it's pretty amazing how the U.S. after World War II, found itself in this position to really like rewrite the rules of global finance. It's like everyone else left the stage, and the U.S. got to step up and yeah, just set the terms.
So, like, Europe and Japan are still reeling from World War II.
Right.
Economies are basically in ruins.
Devastated.
But the U.S., they're pretty much unscathed.
Yeah, they
Yeah.
were. And not only that, but they control something like 30 to 50% of the entire world's GDP.
That's wild. So much power.
It really is. It's mind-boggling when you think about it. That kind of economic dominance is like, I don't know, like having all the aces in a poker game.
Yeah.
And the U.S. knew how to play them.
So they basically designed the New World Order.
In a way, yeah. They led the charge in setting up this whole post-war economic system. And one really key moment was the Bretton Woods Conference back in 1944.
Yeah.
That's where major institutions like the IMF and the World Bank were created.
Yeah, those names are always kind of thrown around, but can we break it down for people? What do they actually do?
Sure. So think of the IMF like a global emergency responder for financial crises, right? When a country's economy is like hitting a major roadblock, the IMF steps in with loans to help them kind of get back on their feet.
Okay, so kind of like a global bailout.
Yeah, exactly. Although, like any good lender, they often come with conditions, things countries have to do to get those loans.
Gotcha. And the World Bank, what's their deal?
Their focus is more on development. They provide funding for projects that help countries, especially those recovering from war, rebuild and grow their economies.
So it's about investing in the future.
Exactly. Long-term solutions, not just putting out immediate fires.
Okay. So the U.S. is setting up these institutions, shaping the rules. But Varoufakis calls this a global plan, which kind of suggests it wasn't just about U.S. dominance, right?
Right. He makes the point that the U.S., having gone through the Great Depression, was really determined to build a system that prevented another global economic meltdown. They knew a stable world was in everyone's best interest, including their own.
Yeah, that makes sense.
It was about creating a global network, almost like a safety net, so that if one economy faltered, the others could help prop it up.
Okay, but it wasn't entirely selfless, right? Come on.
Well, of course, there were benefits for the U.S.
Yeah.
This whole system with the dollar at its center created a huge demand for American goods and services.
I see.
It's what Varoufakis calls the global surplus recycling mechanism. Basically, U.S. trade surpluses ended up funding the rebuilding of Europe and Japan.
Lending money, investing in rebuilding,
Yeah.
and creating new markets for their own products sounds like a pretty sweet deal, if you ask me.
Yeah, it was.
Yeah.
And a really good example of this is the Marshall Plan. Think about it. The U.S. pumped billions of dollars into rebuilding Europe, including former enemies like Germany and Italy.
It's wild to think about them helping their former enemies.
It's a pretty remarkable chapter in history, for sure.
Yeah, what was the thinking there? Was it just about economic stability, or was there something more strategic going on?
It was probably a mix of both. On the one hand, a prosperous Europe meant a stronger market for American goods, right?
Makes sense.
But then there's also the geopolitical angle. A strong unified Europe acted as a counterbalance to the growing influence of the Soviet Union.
So it was a win-win for the U.S. They boost their own economy, and they gain a strategic advantage in the Cold War.
You got it pretty savvy.
For sure. But even the best laid plans, right? By the late 1960s, things start to get a little shaky.
Oh, yeah.
The Vietnam War, Great Society programs back home, and a resurgent Germany and Japan. How did all that disrupt this status quo?
Well, let's break it down. Well, the Vietnam War was a massive drain on U.S. resources. It's estimated to have cost them something like 10% of their GDP at the time.
Whoa, that's a lot.
It is. And it forced the U.S. government to borrow heavily, which led to those budget deficits. Remember, this whole system relied on the U.S. having a surplus, to keep the dollar stable.
Right. So the war is putting a strain on things. And then on top of that, you have these Great Society programs back home. What impact did those have?
Well, these were programs spearheaded by President Johnson. They were aimed at tackling poverty and inequality, things like Medicare, Medicaid, and expanding Social Security.
Right.
noble goals, but they meant increased government spending, which, further contributed to the deficit.
So you've got these internal pressures, the war, the social programs, and then, to make matters worse, Germany and Japan, the very countries the U.S. helped rebuild, are now becoming economic powerhouses in their own right.
Exactly. The U.S. is no longer the only game in town. Their dominance is waning, and that carefully crafted system starts to show some cracks. This is a really pivotal moment. It's the birth of what Varoufakis calls the global minotaur.
Okay, I gotta admit, that name is both intriguing and a little ominous. What exactly is the global minotaur?
It's a really powerful analogy. Imagine the mythical minotaur, right? This monstrous creature demanding to be fed. Now picture the U.S. as that minotaur, a massive economic beast that needs this constant inflow of capital to sustain its growing deficits.
Okay, I'm following you.
Those deficits, both in the budget and in trade, are what keep the beast alive.
So instead of humans being sacrificed to the minotaur, it's global capital being fed to the U.S. economy.
You got it.
But how does this feeding actually happen? How does the U.S. keep attracting all that capital?
That's where things get really interesting. The U.S., despite its growing deficits, becomes incredibly adept at pulling in capital from all over the world. It's almost like a giant magnet, drawing in money like iron filings.
Okay, break down that magnet for us. What are the forces at play here?
Well, first you have the dollar's unique status as the world's reserve currency. This means there's constant global demand for dollars, regardless of what's happening with the U.S. economy.
So even if the U.S. isn't producing as much, everyone still needs dollars. That's pretty powerful.
It is. Think about it. When China buys oil from Saudi Arabia, they pay in dollars. When a business in Argentina imports goods from Brazil, they likely use dollars for the transaction. This constant demand keeps the U.S. currency strong, even when other parts of their economy might be struggling.
Okay, so that's one factor. What else is working in their favor?
Well, remember those high energy costs we talked about?
Yeah.
They actually benefit the U.S. in a roundabout way.
How so?
Because the U.S. is less dependent on foreign energy than, say, Europe or Japan. So when energy prices rise, their companies actually have a competitive edge.
Interesting. So while other countries are struggling with those high energy bills, the U.S. is less affected.
Right. And then there's the issue of wages.
Okay, how do wages fit into all of this?
Varoufakis points out that after the 1970s, wages in the U.S. didn't really keep pace with productivity.
Meaning?
Meaning workers were producing more, but their real wages weren't going up significantly. This helped boost corporate profits, making U.S. companies even more attractive to investors.
So basically, they kept labor costs low, which made their businesses more profitable and therefore more appealing to foreign investors.
Exactly. Good for business and investors, but not so great for the average worker whose wages aren't keeping up with the cost of living.
Right. It's a reminder that economics isn't just about numbers. It's about people's lives. And there's one more piece of the puzzle, right? You mentioned America's geopolitical power.
Ah, yes. That's the kind of intangible but very potent force that underpins everything America's military might. Its cultural influence, its role as a global leader, it all inspires confidence, even when their economic fundamentals might be a little shaky.
It's like a self-fulfilling prophecy. They need capital, so they use their power and influence to attract it, which in turn reinforces their power and influence.
Exactly. It's a fascinating dynamic, but like any system, it has limits. And those limits were exposed in a big way during the 2008 financial crisis.
Oh yeah, 2008, the year the world almost came crashing down. What happened to this global minotaur and all of that? Did it finally collapse?
It didn't completely collapse, but it was definitely wounded. One sign of this was the shrinking U.S. trade deficit after the crisis. Remember, the minotaur needs that constant influx of goods to keep going. But after 2008, that influx slowed down.
So the U.S. wasn't consuming as much? Did that mean the flow of capital into the U.S. also dried up?
Not entirely. The U.S. stock market, despite all the turmoil, continued to outperform a lot of others around the world. So it still acted as kind of a safe haven, attracting foreign capital, even if it was at a slower pace.
Yeah, that makes sense. I mean, investors, even when they're spooked, are always looking for a safe place to park their money, somewhere they can still make a return. But this does raise the question, is this whole global minotaur model sustainable in the long run?
That is the big question.
Yeah.
And to make things even more interesting, you have the rise of protectionist policies in recent years, particularly during the Trump administration.
Oh, yeah. All those tariffs and trade wars definitely shook things up.
For sure. It was a big shift.
What was the thinking there? Was it just about trying to prop up a failing system, or was it something more deliberate, like a move towards a totally new economic model?
Well, that's a debate that's still going on among economists and policymakers. Some see it as a desperate attempt to cling to, a fading era of American dominance. Others see it as a necessary correction, a way for the U.S. to kind of rebalance its economy and become less reliant on being the world's consumer of last resort.
And how did all of this impact Europe? They were hit pretty hard by the 2008 crisis, right?
Absolutely. Europe, with its close ties to the U.S., felt the ripple effects very strongly. And they've been struggling to fully recover. Their economies are still very much intertwined with the U.S. So any tremors in that global minotaur system are felt across the Atlantic.
So we've got this wounded global minotaur, a U.S. that seems to be rethinking its role in the global economy, and a vulnerable Europe still grappling with the aftermath of 2008. What does all of this mean for the future?
Well, if I had a crystal ball, I'd be a very rich man. But the truth is, nobody knows for sure. We're in a period of really profound change, a time when the old rules of the game are being questioned, and the new ones haven't really been written yet.
It feels like we're at a crossroads. The global minotaur, this system that's been shaping our world for decades, is showing signs of strain. But what will replace it? Is this the end of an era or just the beginning of something new?
Those are the questions we need to be asking ourselves. Will we see a new global minotaur emerge, maybe with China at its center? Or will it be a more multipolar world with power and economic influence spread out more evenly?
So many possibilities. It's a bit daunting, but also really fascinating. I don't know about you all listening, but I'm suddenly feeling a lot more aware of, all the economic forces at play.
That's the beauty of exploring these topics. It opens our eyes to the forces that shape our lives, the things we often take for granted. And even if we don't have all the answers, understanding how we got here is a really crucial step in figuring out where we're going.
Couldn't have said it better myself. We've covered a lot of ground today, from that post-war economic order to the rise and potential fall of the global minotaur. Hopefully, this deep dive has got you thinking and maybe inspired you to learn even more. After all, the future of the global economy is something that impacts every single one of us. Thanks for joining us.